How's it going, everybody? Welcome to the Hot Corner Insider Live Strategy Session. We do this every Wednesday at 1 o'clock. I'm your host, Steve Straza, Director of Research here at All Star Charts. In these videos, we do a little bit of macro. We talk about, the recent developments for the broader market. Then we dive in and we talk about our favorite charts and the biggest insider transactions that are on our radar right now. Quick disclaimer, nothing we discuss here today constitutes any solicitation to buy or sell any securities. This is solely for informational purposes, not to be construed as investment advice. For more, allstarcharts.com/terms. So this is really it. 430 in SPY, 4,300 in SPX. Oversold. Momentum oversold here for the first time in about 12 months. Last time we were oversold, you see it down here. Not even October, late September. Okay? Breaking trend a little bit, which we see drawn here in blue. While 430 is a critical level, there's a lot of price memory all the way down to 4150-ish, right? You see the VWAPs down below here. You got a shelf of highs here. A lot of price memory here. Let's see what happens. I thought there was a chance that we were really going to hook higher and go after just a quick shakeout last week. The rally attempt really fizzled out. Friday was kind of ugly. What's interesting, though, just looking at, so Friday's candle was pretty ugly across the board. The NASDAQ held up a lot better, and we're going to talk about that in a second because there's some really notable relative strength there. But for now, 4,300 is really the level we want to get back above in the S&P 500. I think if we do scoop and score here, mega cap tech is hot today. NASDAQ 100 here up 1% on the day. If that is going to reverse higher and undo this little topping formation, I think the S&P eventually does too, and probably brings it back to that 4,300 level. But let's see it. That will be excellent confirmation for what we're seeing kind of unfold with the NASDAQ right now. Looking for further downside, I think this is it. If Russell 2000 doesn't stop falling here, and it's really trying to dig in here today. Got a long lower shadow already, struggling to turn positive. We'll see how we close today will be big. The past few days of action have been big also. Kind of looking for if we were going to get the follow through or if we were going to reverse higher from some of these short-term tops. I think the Russell 2000 heads back to this 163. If this 170 level goes, so these year-to-date lows go, we're going back to last year's lows. And then that level absolutely has to hold. What's causing the volatility these days? It's really those intermarket headwinds from 2022 and even 2021 are now back. Dollar been going up. Stocks have been going down. It's been going on since this summer. But it's not just the dollar. Bond market's going crazy. Bonds are crashing. This is the US 10-year weekly chart. US 30-year, same thing. Valid upside resolutions from this range that we were in for a year. What happens when a consolidation pattern is resolved like that? You get a reaction higher. Seeing it right now. When you measure out these rectangle patterns or whatever you want to call them, you measure them out, brings you to about 550, both the 10 and the 30, give or take, right? So still a ways to go, 50 to 70 basis points higher, I think. Probably happens pretty quickly. So I was saying that growth stocks or the index that has, this tech heavy exposure, the NASDAQ 100, and then, also therefore large cap tech, XLK, communications, which is really, just the sister of tech, XLC, the really tech stocks, internet stocks, social media stocks. They all look a lot different than the S&P 500 or the Dow, some of these other sector spiders, whereas they have completed tops. They look really weak. S&P 500 here shown breaking below its August highs from last year, retracing just about 38%. It's advanced from last year's lows. Meanwhile, the NASDAQ not even close to the first Fibonacci retracement, still kind of holding in right at those pivot lows, right? Refusing to resolve lower from this short-term top, unlike the S&P 500, which for all intents and purposes has already gone, right? The NASDAQ 100 is showing really impressive relative strength through the selling pressure. I think this chart is as important as anything. This tells us where we want to be. How do we want to be positioned? So if this ratio breaks out, this is the NASDAQ 100 versus the Russell 3000, which is 98% of the investable US equity market. It's basically tech versus the market, growth versus the market, mega cap growth, big cap growth. Ripped off the COVID lows, or really the 2019 lows, then straight sideways, right? We hear so much about tech being the place to be and tech leadership. That's been the case this year, but when you zoom out and you see this chart, really been, market performance formed in line for 3 years now. If this range goes and resolves higher, that means more and even stronger outperformance from tech over longer time frames, right? So I think we need to be prepared for that. If this is happening now, if this is starting right now, and everybody's going to chase tech, chase that leadership, right, into year end, which is a very Wall Street thing to do. That's going to start right now. This is what those patterns will look like. And this is how this is right here today, 115, 110. I just made these charts. live data. So you have these nasty tops, called that a head and shoulder reversal pattern. Look like we were going, but no, they refused to go. Now do we hook higher? That would be called a bear trap, a bull hook, a little failed breakdown. Failed tops, great patterns, especially in the context of underlying uptrends, which is, shown here from the left-hand side of the chart. This is what we should see, like right now, right? Got to close strong today, follow through the end of this week. And where are we going to want to look for long opportunities? If that's the case, like I said, the S&P 500 in that environment very likely turns things around, right? And undoes its top too. We want to be looking for opportunities in the NASDAQ 100 because that's where the strength is. Not just tech, not just the NASDAQ 100. That also includes communications, right? Your Google and your Microsoft. Google and Facebook. That's really what you're looking at here. Google and Facebook. They're like 40% of this index. How about that relative strength? For a year now, steadily higher, right? Communications just steadily outperforming the broader market. This top looks far better than any other sector. Hasn't broke down at all. Not even a little failed move, not even a little shake, nothing, right? So I think communications are also where we want to look. Let's get into it. This is going to be maybe the shortest call ever, and I'll tell you why, because really I'd be doing a disservice if I came on here and showed you guys 20 different charts and long ideas, because I think we're right there. This is an inflection point. We have to reverse this move, and we got to see some follow through to have any conviction in putting on new trades, even in tech, even in these leadership groups, right? So I think we'll know a lot more by this time next week, and I'll come out and I'll bring you another 20 different ideas in the tech or growth space. But for now, let's just get ready. If this is where we're going, right, and these charts are going to end up looking like this and following through higher, we'll have time. There will be plenty more charts to talk about next week. So for now, Google, we continue to like above 125.50. All these big cap tech names too, the insider activity tends to be political violence for whatever reason. I don't know. What's up, Wavy and Phil in the chat? So we like Google above 125.50, targeted about 150. And then I think, once we reclaim those old all-time highs from 2021, there'll be more trades and we'll want to stay long this name. Same with Meta, right? We got a shelf of price memory right around this 290 level, which is also the pivot lows. You could be a buyer right here, right? That's 10 points of downside for about 85 points of upside. It's a fine risk reward. So Meta back to its old all-time highs. What a V this chart is. They don't usually look this way, guys. A lot of people miss this one along the way. Right? This has been the longest corrective action or consolidation that we've seen from Meta since last year. It's really just been straight higher. So I would say this is healthy. And look at the way it corrects, right? Straight sideways. Impressive. This is another one. NVIDIA. What? Strength above 475? If you're dying to get in, you could use 402. I think if we break 402, we head back to those 2021 highs. Maybe fill that gap. I think really strength through 475, 476. Probably the best way to play this one right now. Adobe, I really like this one because this is a buy on strength only. Make the stock prove itself to us type of a setup here. Right, so Adobe working its way higher, really completed this base already. You see the 200-day moving average sloping higher, indicating new uptrend. And we're just, digesting some gains here. 62% Fibonacci retracement. I think we buy on strength back through 537, and Adobe keeps completing this base, heads back towards those old all-time highs. Notice how a lot of these charts look the same, right? There's Adobe. There's Google. So working our way back to those old all-time highs. And then we'll be out here again saying, oh, look at all this overhead supply. Right, this is what the strongest indexes look like now, dealing with these old highs. Still a lot of work to do structurally, I guess would be the point. Rider Systems, ticker symbol R. Got an activist in this one, HG Vora, since last year, just under 10% stake. Massive base. Just broke out, a little bit of weakness recently, pulling back. Very, very actionable here. Such a clean level, a key psychological level. It's in a group that's really not trending that well. So the relative strength really stands out. Right? Industrials, transports, not so hot. Rider is. So that, the leadership there really stands out. It continues to trend higher if the market finds its footing, right? We're above 100, target of 150, so 50% upside in this trade. One more. It's a financial, it's a tech stock. Donnelley Financial, DFIN. CEO is the Form 4 buyer, Form 4 filer. Another nice base. We're above 52, long to 69. Big pullback, I think, yesterday. Big red candle, stabilizing here today. Let me double check. Last I checked, at least. Yeah, up slightly on the day, down about 4% yesterday. 54 and change, stop around 52. Really nice risk reward here. Fresh breakout in a really rough tape for the broader market. I like seeing the dollar having trouble bumping against 107. Yeah, Pat texted me last night. He said, look at that candle in the dollar. Took a picture of it, and he wanted to remember it in case it's the peak. Follow through today, right? Well, shooting star, I guess, yesterday. Gravestone Doji. Yeah, we'll see with the dollar. It's been incredibly strong, right? Little pullback would be just fine. Also seeing the relative strength in NASDAQ, et cetera, just every day watching it. Personally hoping to get more attractive prices to slurp up. Yeah. I don't know. Another 50 basis points not likely enough to push through support. Here's the thing with the NASDAQ 100 with tech stocks. They were significantly re-rated in 2021, 2022, right? The drawdowns were very severe for tech, communications, worse than any sector, right? So these stocks already got hit. Was that the market pricing in a higher interest rate environment in the future, right? The market is a discounting mechanism, prices these things in early. It's surprising and a bit strange because now we're saying, look at utilities, look at real estate pricing in higher rates all of a sudden. Like, did they just get the memo? Was one sector repriced, long before another one? I think so. I think maybe, right? So maybe tech stocks, especially mega cap tech stocks, are going to be just fine with higher rates. You have to remember the companies that we just talked about, your Googles, your Microsofts, Apples, Nvidias, they have plenty of cash. They're net lenders, if anything. They should be okay with higher rates. Monopolistic businesses, plenty of cash, right? It's the speculative growth stocks, the little tech startups that struggle in a higher interest rate environment. So you kind of have to bifurcate the tech sector and really all sectors when you ask that question of what does the bond market do to this issue. All right, guys. Need way more defaults and bankruptcies. We have barely repriced a damn thing. Yeah, I would totally disagree. I talked to my friends out on the West Coast. It's tough. It's a tough environment out there for startups. Our venture capital friends, our PE buddies out in Silicon Valley. Not a good environment. It's been a bloodbath for tech, for speculative tech. So we shall see. I don't think higher interest rates is the end of the world. I think some companies will be fine. Others will not. I would look to the regional banks and REITs for where issues will probably pop up first. Surprised we haven't heard of a bank struggling yet, but maybe we will soon. All right, guys, until next week, thanks for joining. Reach out, info@allstarcharts.com if you have any questions. Thanks again. See you later.